fact, there is also an opportunity for business, private-public partnerships as it relates to the infrastructure program that Donald Trump is talking about. The banks, I guess, are going to fund some of that. Do you see opportunities for JPMorgan to be raising debt, raising securities as a result of the infrastructure program? What do you envision?
So infrastructure is a very complicated thing. So you talk about ports and rivers and tunnels and roads and grids, and some of those things will be eligible for PPI. And to the extent that that's done through tax credits, et cetera, we will participate. And other things which are done not through PPI but through government agencies, we do financing for that too. So, but I think the really important thing is the United States needs to have long-term, thoughtful, proper infrastructure planned at the city level, the state level, and the federal level. And it's a shame that we can't make that stop-start. We don't run a company that way. You wouldn't run your life that way. You have to think these things through, And we've done a terrible job maintaining our infrastructure. Our county's bad. We treat a massive investment in a bridge or a grid or a tunnel exactly the same way we treat throwing away, $500 billion. I mean, one is good for many years and conducive to future growth, and one is not. So, I would change the accounting for it. I'd change how I look at it. I'd have a lot be done at the city level. Mayors know what they need, and sometimes the federal government, is giving money away, and it becomes a it doesn't maybe get used in the best way. And there are legitimate complaints about how some infrastructure programs were badly managed.
The other part of Trump's plan is the rollback of regulations. Do you see Dodd-Frank changing?
Probably. Look, right when Dodd-Frank happened, okay, everyone, even the Democrats I spoke to, said a lot of stuff was put in there, and at one point it'll be an appropriate time to open it up, relook at it, analyze it, calibrate it, coordinate it, get rid of the duplication and stuff like that. So, we're not looking for wholesale, throw it out, change everything, the world was terrible. But I think it's perfectly rational to look at what works, what doesn't work, what you're trying to accomplish, so that's one that will be opened up to.
It seems like it would be a positive if the Volcker rule goes away, if they ignore the Volcker rule. Do you see that as far as impacting?
Let me separate the Volcker rule into three pieces. Hedge funds, not a big deal. Proprietary trading, not a big deal. I've always thought that in market making, you need good market making in markets. You have market making in chicken, cotton, corn, everything, rebar, everything in the world. You need it in financial markets. And I think it was not needed for market making. I think that the rules that have already been put in place, capital, liquidity, repo rules, reporting rules, requirements, rules of reporting back to the proper authorities, what people have done, that was sufficient. So I always thought that was duplicative. And the Fed just came out with a study itself, which they released sometime between Christmas and New Year's, I believe, which said that their own study shows that capital markets in the corporate bond market making in times of stress has been worse because of Volcker, and which I've been talking about for a long time. Now the Fed has come back and confirmed it. It's not a major thing. Just recalibrate it.